watching Bloomberg Quint live here from the World Economic Forum's annual summit. It is day 3 and I'm joined today this morning by Neeraj Kanwar of Apollo Tyres. Neeraj, thanks very much for speaking with us.
Thank you. Pleasure.
What's the demand situation looking like back at home?
Well, I think, post-Diwali, commercial vehicles have come down.
Yes.
Passenger car vehicles have also come down. But I think that's just a short-term blip. I'm a very optimistic guy and I believe that this will come back up. Given that April 2020 we have the BS6 coming in both the vehicles. I think there's going to be a demand surge coming in very soon. We're just waiting and watching. I think coming this year, 2019 is going to be a good year.
Okay, so can you give me some idea of what you expect demand to be like either for the calendar year or for FY20?
Well, I think, as Apollo is leaders in the truck segment in India, we are clearly 30% market share leaders in truck radials. Currently, I see a demand-supply situation for our own tires, whereby demand is much more than what we can supply both to the OEMs and to the replacement. I believe that we should be looking at a double-digit growth in 2019, both in the commercial segment and in the car segment.
Okay, how is the replacement segment shaping up?
Well, replacement for us is very good. We have increased our footprint in India with adding a lot of close to 1,000 new network dealers in the rural areas, which is where the growth is going to come.
Okay, and input costs is the other question I wanted to put to you again, what the outlook for the year is like and how that will play out in your margin performance, which has been reasonably good. You've managed to moderately improve margins and maintain them at about the 11-12% level. Yeah,
so input costs, currently rubber has softened, oil prices have softened as we know. So input costs are down. We're waiting and watching. I can't say what's going to happen in the coming year. There's a lot of economic downturn in various other countries, so we really have to see how both rubber and oil prices play up. As far as our margins are concerned, we always look at a double-digit margin. We are a company that keeps on investing back in the organization, in R&D and in brand building. Our biggest challenge coming forward is going to be how to create a new brand with Sachin. We've tied up with Sachin Tendulkar recently, and to try and see how we can project that to the next level and take Apollo to the next level.
So if you're saying input costs have come down, and that, did you expect those to sustain, and therefore do you think you might in fact be looking at price cuts across certain categories of tires?
No, I think that's too soon to say.
Too soon to say?
It's just happened. So in Q4 we'll be seeing a little bit margin expansion, but in the longer term I can't give you guidance about what's going to happen in input prices.
Okay. What about your growth strategy and inorganic strategy, if there is any one on the anvil right now? Though I must say that everybody here seems to be a little bit more gloomier about the global outlook.
Yes.
So, I don't know if you're looking at international opportunities. We've been there and discussed that here in Davos a few years ago. But no, I thought I'd bring it up again.
Inorganically, no, we don't have any plans currently. As you know, we started our production in Hungary in 2018, which is going very good. We are reaching peak capacity by 2019. So the challenge is going to be how do we sell that output into Europe, which is getting interesting for us, challenging. Recently we started supplying tires into VW, we started supplying into Audi, into Ford in Europe. So that's a good start for the Hungary project. We also recently announced a greenfield in Andhra, which is another new journey for us in Andhra, given the demand situation that's happening in India and the way we are seeing the growth happening in India, especially for our branded tires. I think Andhra is going to be very interesting for us. So as far as growth is concerned, India will keep growing. We have to keep on strengthening our footprint in Europe, which we are trying to do.
Okay, so it looks like a year of consolidation for you, 2019 and parts of 2020 in that sense.
Well, consolidation in that sense because all capex is coming in now. We had a Chennai expansion, nearly doubling our capacity, so that producer is going to come into the market. So it's now to sit back consolidate, try and gain on our capexes which we've put in the past 2 years, and then look at a new production facility in Andhra coming up in this.
Okay. One final question, Neeraj. You all ran into a pay issue with your shareholders, and at that point, I think you all decided finally, because it didn't get shareholder approval, that you were going to look at a revision in pay for FY19, if I remember correctly. Was that a bit of a governance wake-up call for you all, and how are you looking at being able to communicate better to shareholders many of these issues?
I don't think it was a wake-up call. I think it was a very good thing that the investors spoke their voices to us. We heard them.
Okay.
The board revised the compensation. And now the investors have given us approval and business is back to usual. And that has just gone back, and I think it's a good thing that the company has been very transparent, very communicative, and have heard the investors on what they have to say.
But has that changed your remuneration policy substantively for the future? I mean, for this you now have approval.
Yeah, we have a revised policy,
you revised,
and yes, going forward we'll be looking at it.
All right, we'll leave it there. Thank you so much, Neeraj, for speaking to us, especially in the cold, and have a good rest of Davos.
Thank you.
Thanks very much.
All right, keep tuned in to Bloomberg Quint for more voices from Davos. But for now, let's head into the markets and see how we're faring in trade today. This afternoon, for the indices right now, we're slightly more subdued. In fact, absolutely flat in trade. After seeing that dip coming in the second half of trade, we're now plateauing out. 10th has an 831. This is exactly where we left off trade yesterday, and that's where we've come now. So just about breaking into the green for the Nifty 50. And we'll come across and we talk a little bit more about what is contributing and what is not on the index. So let's start off with the gainers in today's session. Reliance makes a comeback and supports the index in today's session, so about 1% higher for Reliance Industries. This is not the highest point of the day, but yet not doing all that badly. 1240 on the stock. TCS is up 1%, but your top gainer on the Nifty stands to be ITC, which had lost 4% in yesterday's session, recovering a fair bit of lost ground in today's session. That's at 280. Vedanta, Grasim, Indian Oil, Dr. Reddy's are some of the other movers on the upside. Amongst the losers, Bharti Infratel posted its numbers, is down 4%. Tata Motors gives up 3%. Sun Pharma continues to languish, 421 on the stock. Yes Bank, we're going to be awaiting numbers now, down 1.5% ahead of that. Bajaj Finserv, Coal India, Cipla are some of the bigger losers. Good afternoon, Neeraj.
Good afternoon, Devina. I was just trying to look at what's happened to some of the result reactions as well. So NIIT, for example, has gotten a bit pummeled out of shape in the session today, 6% lower on 2.5 million shares traded, and clearly that space seems to be under pressure because HCL Info, KPIT Tech has different reasons, of course, but HCL Info is down about 6% too in the session today, and on fairly high volumes, I might add. Amongst other names, Ashok Leyland grinds lower, so 85.5 now, another 4% gone for that one. Edelweiss posts its numbers, corrects another 3.5%, so that is not doing all that well. Canfin Homes, a results boy, is down as well. Sterlite Tech is absolutely flat, good numbers, but expensive stock, and therefore not quite reacting to what is better than estimated the street numbers.
And
what's done well. And Ultratech Cement, of course, the big boy that came out with numbers, and the volume growth numbers looking fairly robust. The stock right now about 1.5%. I was talking to Nikki before I came in, and the volume growth numbers for Shree as well were by and large in line. These numbers are better, but let's wait and watch. Last time as well, when the perception was that Ultratech's commentary is very strong, the stock has gone off completely off the boil. This presentation seems to be okay. Let's wait and watch what happens here. But just two names that I want to highlight, and actually three, before we kickstart the conversations with some of the other experts as well, corporate voices. Interglobe Aviation is the top gainer on the Nifty 500, 6% higher in trade. Ujjivan follows suit, another 6% or almost 6%, 5.94%, 301 for Ujjivan Financial doing well. And Oberoi Realty and Godrej Properties, both of these names. Oberoi, the margin picture was slightly weaker than anticipated, but maybe the markets are taking heart from the fact that the revenues have looked okay. So that stock is up about 5.5%, and Godrej Properties is following suit about 3.5%.
Yeah, I think and that's what's happening in the rest of the real estate bucket. Today's session seems to be slightly better off compared to the last few days, where there was some amount of profit taking across the board. So you're seeing a respite coming in there for much of this space. So that's even Godrej Properties, like you said, about 3.5% higher. I want to quickly look at what's happening to Europe, because that's up for trade as well. That's open up for trade as well, and we're probably going to be taking cues from there. Then we talk a little bit more about what the volume picture looks like at the start of this last leg of trade today. So Europe as a pocket is flat to negative, down about 0.4% for FTSE 100, CAC's down about 0.1%, DAX down about 0.2%. So nothing major in terms of cues coming out from there. Dow futures are down about 0.1% as well, so fairly subdued. That's your volume picture. Remember, today's Thursday. You will see a bigger F&O number because of the Bank Nifty options expiry. So 10,91,000 crores already is what you're seeing on the futures and options side. Cash market, though, about 19,000 odd crores is what you've got.
So it's wobbly. A couple of earnings conversations happening a bit later on in the show today. One of them is Thirumalai Chemicals. Remember, the earnings picture wasn't looking all that great. About 6% revenues lower, net profit down 78%, margins at 8.2 versus 23%, and that stock is locked on a 20% circuit lower. The other one, of course, is Tejas Networks, wherein again there was an issue with the earnings, and that stock is down about 12.5%, trading at the lowest point of the day. Again, very close to 1 million shares traded. The key part is, and on companies wherein the disappointments have been there on the numbers, the volumes have looked exceptionally high in almost all of those. So very interesting. Not to say that companies like Interglobe Aviation don't have high volumes. Actually, 7.5 million shares would mean that Indigo volumes too, compared to the 20-day averages, are much higher. But having said that, the losers have a fair degree of corrections that have come in on fairly steep volumes, and interesting to see what the street works with them. The other one, Devina, though, is Ujjivan Financial Services. Strong 5% higher, 10 million shares traded. The comment about SFB's, the small finance bank listing happening in the first quarter of 2020, all of that, and just purely the delivery of the numbers leading people to be fairly optimistic about this one. Both Ujjivan and Equitas had faced the wrong end of the stick in the recent past. These numbers should provide some respite to the investors.
And Equitas, as you can see, in the last few minutes, the spike has come about 122 on the stock price, 3% higher this afternoon. Some stocks which are trading at 52-week lows this afternoon. So while you have a Coal India making a new 52-week low in today's session, 223 on the counter. The likes of Gateway Distripark, then you've got a Dilip Buildcon. 52-week low is 345. The stock's trading at about 346 right now. Balkrishna Industries, very close to the 52-week low of 845, currently trading at about 850. And Ashok Leyland has been grinding lower and making new lows as each day passes. Today, the stock is at 85.55. Not the lowest point of the day. In fact, it made a new 52-week low today of about 84.85. Just a smidge higher than that right now is Ashok Leyland. And Icici Securities, another bigger name there. 205.5 is the 52-week low, and the stock is trading at 207. Just two stocks which are trading near or at 52-week highs. One is Muthoot Finance, which is doing fairly well for itself. And the stock right now is at 543. A 52-week high is 550, and an Info Edge, but the 52-week high is 1783. So it's just 3% or so off its 52-week high. Okay. All right.
No, sorry, we're just getting ready to get the management of Thirumalai Chemicals, Devina. Just to brief our viewers on the numbers, revenues were down about 6%. Net profit was down about 78%, and margins at 8.2% versus 23%. A sharp contraction in the operational picture, as a result of which the bottom line numbers have looked even worse for Thirumalai. I think the raw material costs, as we understand, went up about 23%, and that's what caused this. They increased the prices of malic acid, which is one of the products, to offset these costs. But can they reverse the kind of performance that they've thrown in the third quarter? Let's get the management. The managing director, Mr. R. Parthasarthi, joins us right now on the phone line to talk about this. Mr. Parthasarthi, good afternoon. Thanks so much for joining in. What went wrong in the quarter? Is it simply just the uptick in raw material costs, or something else as well?
Nothing like that. Crude prices were fluctuating and fell in late Q2 and early Q3. Along with that, raw material prices started falling, finished product prices started falling, which is normal. And we have been through these cycles a number of times without having any effect on margin or volumes. But this time what happened, it added to the volatility coming out of the whole China-US trade agreement, the China slowdown, et cetera. China is a major consumer, though it's not an exporter for our products. So basically, as prices fell down, volumes fell down in the Far East, and prices fell down sharply, the volatility created the drop in prices created huge fears of within our customers here in India. And we are mostly this product, the main product here is mostly phthalic anhydride, is mostly an Indian product for us. It's about 90% Indian. So people stopped buying in about October, November. The whole market just froze. And this happened not only for us, but it has happened in many other commodities. So buying stopped. We naturally didn't push it further down by trying to dump product. And therefore prices fell, margins fell. This volume has completely recovered. I mean, it's been a very good recovery the last 15 days to a month. And prices have started recovering. Margins are also starting to recover. So I won't say that, I mean, these are the main reasons. We use this opportunity to complete a lot of other maintenance and debottlenecking activity. We slowed down production slightly, not greatly. We didn't shut down. And after 4 years of rising prices and margins, or rising margins really, this had to come down, and it came down. It was a correction, basically because of the volatility in the Far East.
Right. So, is it done for this quarter, sir? I mean, do you see a turnaround?
This quarter, there will be definitely some residual effects, but volumes, as I said, are picked up sharply, and we are very bullish on volumes. Margins have also started picking up, as our customers, mostly in the medium scale, the processors and the converters, they have liquidated all their stocks. And so purchasing activity for the last 1 month has been very good. And we are running full blast as ever. And we see no problem in volumes. Prices, as I said, or rather not prices, but margins are still not comparable to the second quarter, but they're starting to recover. So we'll see some residual effects during this quarter. And I think the next quarter will be excellent. But this quarter, we will still see some residual effects, tail-end effects.
Right. So
it will not be as bad as the last quarter, but we'll see some. But the volumes will help us, because last quarter we lost volumes. So
do we look at, do we hold on to the 23% margin mark and discount what happened in this quarter by what you're saying, 8% is what you clocked in because of the volatility that you faced, a slump in demand domestically. Will you end the year closer to the number that you have seen in the past?
No, 24% gross, margin, EBITDA margins were something extraordinary. It will moderate over the whole year. I expect it to moderate. And that was an extraordinary time for the last 6 months or 8 months. I think it will be moderate, but it will be still very healthy margins.
What's the number there, Mr. Parthasarathy?
Our problem for the last 3 years is we've been not able to supply product.
Right. No, Mr. Parthasarathy, if I may, so just trying to get some numbers here. If volumes are looking okay, but the prices are not, what's the ballpark average margin estimate that you can give us for annualized for the year on average?
I cannot give out margin estimate for this quarter because it is transient, and we do not give out such information.
Okay, let me try and rephrase my question then, sir. If indeed things have started looking to pick up, last year, if I'm not wrong, and please correct me if I'm wrong, your revenue numbers were about 1,037 crores and you clocked in a net profit about 144 crores. Do you reckon you could be in striking distance of those numbers, or will this year, because of quarter 3, be a bit lower than otherwise on the profit front?
Obviously, we have lost this quarter, much of this quarter. Saving grace was a few years ago, under these circumstances, we would have had a cash loss, made a decent profit. The this is because of internal efficiencies and because volumes have looked up and the whole thing, internal efficiencies rather. But the H2 will not be as good as H1. That I can tell you because it's already part of it is over. 3 months is over. And it has not been very good, as good as Q1 or Q2. We will, I'm not saying we'll be not in striking distance, but we'll be definitely not comparable to the last half year.
Right. You made a passing comment, before you started answering the question, where you said that your problem is that you're not able to supply. Could you?
No, we have had 3 years of, let me say, a sold-out position every quarter, every month, 3 years. It changed during this last quarter for about 1.5 months. And that is why we are expanding significantly. And we are putting up this new plant in Dahej. We have done an expansion, or we are in the tail end of a major debottlenecking in South India. And that was in our commodity chemicals. Our Malaysian company, which went through a similar compression during Q3, has bounced back already. They completed a major expansion, 40% expansion last year. And that has started giving results. Our food ingredients have been doubled. They are still, picking up. We are operating at about 130% of last year, 140. But it will go up further to about 180%. In terms of product volumes, offtake is good. And Malaysia is now looking at another expansion. As I said, we are in construction in our first phase in Dahej in Gujarat for our Indian products. And we are studying a project for food ingredients. We are in the late stages of study of a project in the United States from gas to intermediates to food ingredients.
Mr. Parthasarathi, just one final question from my end. I understand you can't give us guidance, but if I look at your gross margin performance over the last 5 quarters, starting Q3 FY18, it's been hovering above the 40% mark consistently. This quarter is 26.7%, if I'm not wrong.
Yeah.
Does it revert to not necessarily above 40%, but 35% odd in Q4?
I can't say that. I don't want to say that. I can't say that right now. It's still transient. And a lot of our purchasing happens, during the month. We don't stock up much. Purchasing happens during the month. And it's a transient situation. We watch it every day. Prices change every day. And we react to it both in purchasing side and on the sales side. So in such a volatile and transient situation, we correct things every day. It's a commodity, both raw material and finished product.
Is the finished product price hike that you've undertaken takes care of the cost increases that have happened, or would you need to hike prices more, sir? Malic acid, for example.
I beg your pardon?
I believe you've hiked the prices for malic acid, which is one of the key products, right?
No, that's still not a major product, you must remember. Our commodity chemicals are still major. Our food ingredients, malic acid and fumaric acid, and our fine chemicals still represent only 25% of our business, but they are increasing. And a lot of that increase will also come out of a new project in North America, but that's not yet internally approved. It's in the last stages. And Malaysia is also adding derivatives. We are planning these fine chemicals, some of these fine chemicals in Dahej too, as we go along. But presently, we are still at only about 25% of these fine chemicals, and we have raised the prices because we have strong positions on these. Raise the volumes and raise the prices.
All right. Mr. Parthasarathi, thanks very much for joining us. Appreciate you taking out the time and highlighting how the quarter has been for you. So while obviously not putting a number, he did mention that the margins of 23% that they had clocked in earlier was on the higher end. May not see that number again. The other stock that we're talking about is Tejas Networks, and it has not been the best quarter for the company. A delay in orders from the government for the BharatNet project impacted revenues of the company. Adding to that was the higher than expected working capital cycle. Let's discuss the quarter gone by with Sanjay Nayak, the MD and CEO of the company. Mr. Nayak, thanks very much for taking out the time. Put into perspective the quarter gone by, what were the highlights for us?
So first of all, I wanted to clarify a couple of things. As a product company, the inherent nature of our business is that we are really not a Q-on-Q business, because we have a few customers which are large telcos and government customers. So as a result, there is an inherent lumpiness in the business. So, but if I were to take a 9-month aggregated view, we are about 4.5% lower year-on-year on the revenue side. But on the operating profit side, we are ahead of the plan, where in the 9 months we have a PBT of 113 crores, which is more than the total profits of 106 crores of the previous years. And just from a revenue angle, we've already done 82% of what our revenues were last fiscal year. So we see a pretty strong visibility for our Q4 revenues, and we believe we'll be around 20% year-on-year growth by the time we finish the year. So that's kind of the view of the financial side of things on our business. On the market side, customer mix point, which you also highlighted in terms of the government customers. So we really have 3 kind of customers in our business. One is the government customers, and BharatNet is one of those projects, which is of course inherently very lumpy in nature. Delays can happen. The second one is the telcos in India, the private telcos, and third is international. So from a business perspective, the international part is the fastest growing part of our business this year again. Last year, our India revenues were around 82% and international was 18%. We expect by the time we finish the year that India would be around 75% and international will be 25%, which means international is going to go quite well. And the India private, which is the third one, is also growing quite well for us. And it's again a steady state revenue, because once you're designed into the network of a customer, so long as he keeps investing into CapEx, we are there. And the basic business that we are in, which is the optical transmission business, which is basically creating these high-speed data pipes, really is growing worldwide and as well as in India. And the CapEx cycles are on the upswing, and they will be in the same for the next 3 to 4 years.
What's the order visibility for the next quarter?
So we have given a guidance of around 20% year-on-year growth. So our Q4 revenues will be in the range of 280 to 300 crores, somewhere in thereabouts. So I think that's kind of the range for Q4 revenues. And most of those orders from the government for Q4 revenues, in fact, all the orders from government that we are budgeting for Q4 revenues are already with us. A significant part of the orders from the other 2 categories are also with us. So that is the reason for our confidence in terms of the Q4 revenues.
Sanjay, afternoon. Is there seasonality in quarter 4? The reason I ask this because your margins in the corresponding quarter last year were very low, the lowest that I see in the last 5. What can we expect the operational performance to be like in quarter 4?
Yeah, so in general, I would say second half of the year is usually better, except that last year wasn't the case. So it was probably a one-off year. Just to give you a margin guidance in terms of where things are, on a long-term basis, we have been forecasting around 20 to 22% EBITDA and around 14 to 15 profit after tax. This year, we are tracking better than that. We are about 300 basis points higher in terms of the profit before tax for the 9 months. So I would say that around 22% EBITDA and around 15% PAT, which is our steady state guideline, we should be able to see by the end of the year. Because really, if you see even last year, it's really the revenue shortage which essentially led to a weak margin. But since the revenue visibility for this quarter is strong, we do expect the profitability trend from the 9 months to generally be continual and be in line with our normal guidance.
Okay. Sorry, maybe you answered it already while you spoke about the visibility of the order book, but what is the current order book at hand? Is there a number that you can share with us?
So the order books, by the way, is I think as on date is around close to 450 crores. But the difference is that many of these orders are not for execution in this quarter. So we have to really look at The order book is actually only a reflection of the orders that we have typically from government customers and which are longer-term orders. The private customers and the international customers, usually the orders are, with 6 to 8 weeks or sometimes 12 weeks delivery time. So the order book is really only a reflection of one part of our business. And for that part of the business, the orders which we're going to execute for this quarter, clear to go, as we call it, are already in place. So the order book in that sense for the quarterly revenue is something which we feel very comfortable about.
I just have a follow-up there. I just wonder, I'm looking at a note that had come out, I think sometime in June or July, wherein the expectations of order flows from, BharatNet, Smart Cities, Make in India, Digital India, were fairly strong by you as a company, maybe by the industry as well. Somehow when I look at the quarter-on-quarter or quarter-end to quarter-end order book position, it's not quite come in. Have the projects gone slow, or is it that you are not able to pick up a chunky part of that business?
No. So the good news is, first of all, you picked the absolute right question. Those projects, so in the BharatNet Phase 2, these are all EPC contracts, in the sense you have to supply the equipment and the services and the fiber and the, all the infrastructure play, etc. So those tenders already have happened. If you're talking of a middle of last year and late last year, all those tenders have happened. The winners have been announced, which means the bids have been opened, the financial bids. And a majority of those winners have bid our equipment. So we actually have approximately 300 crores worth of quote-unquote, tender wins, if you were to call it, which our EPC partners have got. But because of some, administrative delay, and you can probably do a Google search in terms of certain events which happened in terms of administrative reshuffle in Delhi last week in BharatNet, to get a clue, things have got a little bit delayed. And as a result, those 300 crores worth of orders which we will possibly get in this quarter, we are not counting for revenues in this year. We are actually going to be probably revenuing them next year. Whereas if you had asked me the same question in June, I would have said that, hey, the tenders have happened, bids have been opened, orders are around the corner, and hopefully we'll execute it in the next, Q3, Q4. But that's not been the case because of reasons beyond our control. So we haven't lost any business. Actually, we've got a significant part of that business via the EPC, bidders. But since they haven't got all those orders, we haven't got the orders correspondingly either.
Any major orders for tender coming up?
There are a lot of tenders in the play for equipment only, which we will, of course, be bidding. There are also tenders coming from some of the states for this BharatNet. Some states have already done, so like Telangana is done, Kerala is done, Rajasthan is done, Chhattisgarh MP is done, Tamil Nadu is coming up, Odisha is coming up, Karnataka will probably be next year, Assam will be next year. So I think there's a bunch on the BharatNet thing. But the BSNL, Power Grid, Railways, those tenders keep coming. In fact, in the utility sector, which is Railways, Power Grid, and BSNL, who use a lot of communication equipment, we actually won a dominant majority of those.
Okay, Sanjay, I get the point, but afraid we'll just have to end up. But we more or less asked you all that we wanted to. We wish you all the best for the quarters ahead. Thank you so much for taking the time out and speaking to us today.
Thank you. Bye-bye.
All right, let's head across to Davos now, where Menka is in conversation with KV Kamath.
Hello and welcome to Bloomberg Quint Live here at the World Economic Forum's annual summit. I have with me KV Kamath, a man who needs no introduction, but his new avatar I will still specify as president of the New Development Bank, which is where he's been spending his time for the last few years, and will be back in India, as he tells me, later next year. That is 2020. That's correct. Mr. Kamath, thank you so much for speaking to us here at Bloomberg Quint. It's very cold. It's minus 14 degrees, so you're braving it. Thanks for that. I'll start with a broader question on the quality of growth in the Indian economy. We're at 7.5%. Everyone in the world is saying, wow, that's, great growth rate. But we still haven't seemed to be able to break out of that band of 6 to 8%. We've done that very briefly about 10 years ago. Why do you believe that we're still not able to accelerate growth to the levels that we desperately need to? And what do you make of the quality of this growth? The last few years have been driven largely by consumption and public expenditure and not enough private investment.
I think you hit the nail on the head. Growth has been driven by consumption. That keeps the momentum going. So that also gives you the floor. The floor for India probably, given where we are, is 7% plus. Now, how do you get to 10%? That's the aspirational number. I think for that you need investment. And what type of investment? Investment basically, primarily in infrastructure, because that's where most of job creation will happen. Now, the good news is that you have such a lot to do on the infrastructure front, whether it is in roads, whether it's in highways, whether it's in rural roads, on the power front, particularly now the green energy initiatives that are there. And in almost every area that you can look at, there is a growth opportunity, which is not only economy positive in the sense that it will drive economic momentum during the act of investment, create jobs during the act of investment, and thereafter, once the fruits of investments, you see those, it will further spur economic growth. So opportunity is huge. Somewhere I think we need to focus on driving that opportunity, which probably has been a challenge over the last many years.
Yeah, what is your assessment of that particular challenge? For instance, one of the largest agencies we had in the country that was involved in the business of financing infrastructure, has seen what one might call a spectacular collapse last year, which is IL&FS is what I'm referring to. I'm not asking you for a specific comment on IL&FS, but what new model of infrastructure financing needs to get developed that will help, move us from 7% to 10% and make the best of this opportunity you've described?
Well, I think there are two parts of the equation. The first part is to make sure that the playing rules by which you set up a business are clear and that they are there and will endure. I think that confidence probably the investors somewhere, they lost that confidence. This goes back many years, right. And that confidence has not come back because there's still a cleanup going on of that challenge that was there during that period of time.
So do you mean mispricing?
No, I didn't mean. What I'm saying is, if you look back 4 or 5 years, you had so-called stranded projects.
Right.
Now, have those stranded projects been, brought on stream in a logical manner? Many have, but there's a lot more to do. But till that is done, entrepreneurs who set up industry and the banks which fund industry will have second thoughts. That's what's happening. In the interim, what has the government done? Government has done a lot of positive things. They have taken on the act of investment by themselves.
Right.
But government can only go thus far. You need the private sector to actually provide the momentum for growth. So I guess there is a correction that is needed to be done in the context of the bank's ability to lend and the confidence which they will, and the confidence with which they will be able to lend. And that correction, once it happens, I think you will have.
But so, what will that correction be? I mean, weren't agencies like IL&FS supposed to play that part of bringing government and private sector together?
Without taking any names, I will put it this way: what is required is to instill confidence in not only the banking sector, capital markets, domestic, but also global investors to come in and take stakes in this business. Because I don't think without the interplay of all these three set of players, we will get the momentum that we want on the infrastructure side.
But you don't think the financing structures, the way PPAs are designed, I remember Finance Minister Arun Jaitley in his very first budget in 2014 had brought up the need to revisit the entire PPA structure. I'm not sure we made much progress when it comes to large projects over the last 5 years, maybe because of the, the sort of the cloud hanging over infrastructure.
Yeah, it is.
But that hasn't changed.
That is one of the reasons. But I think there are several reasons. Because, for example, on roads, there has to be clarity in terms of the tolling and so on. But now with the NHAI, operating roads and successfully operating roads, I think that gives a demonstration effect to new people who want to come in. That is why the strategy of NHAI, putting these roads for sale and getting their, I would say, monies circulated so that they can invest in fresh is a good example, and which can be then which could then provide a whole lot of confidence boosting to the private sector.
Okay.
But we're not yet seen that in the power sector, because these two will be the key things. Well, I shouldn't say not seen it in the power sector, not seen it in the conventional power sector, but you're seeing it in the whole green area.
Okay. So at the NDB, you have sanctioned about 8 billion in loans, about 2.5 already in India, and another 2.5, I understand, that will come to India again. Yeah, so you're looking at about $5 billion of financing arrangements for infrastructure in India. What kind of projects, what kind of partnerships have you been able to, inculcate through this process that you think will be a success?
Very interesting question. See, we are primarily stuck close to our knitting, that is infrastructure. So our existence has been in the road sector, in highways, in rural roads, in rural drinking water, repair of water systems, large canals and the like. And indeed, this year as we go along, we will look at diversifying. In one particular state, we are redoing all the bridges in that state, virtually all the bridges in that state, providing assistance for upgrading them.
Part grants, part loans?
No, these are loans. All are loans. All are loans.
At what terms?
At the typical loans at an MDB lens, which is about 0.5% over our borrowing cost.
0.5% over your borrowing cost. So what does that work out to you, on an average basis?
On LIBOR today, it will be LIBOR plus say 0.5% or so. So it's a very attractive rate.
And these are 5, 8, 10-year projects?
We would love them to be longer, but the choice is the borrower. So it could be 15, 20 years. I would think that's the ideal time frame for most of these projects.
Okay, all right. Two quick questions about India. One about India and one about ICICI Bank. Last year, what we've also seen happen in India is, to some extent, several questions being raised about institutional independence. You would have watched what happened with, the press conference we saw that the senior judiciary hold in the beginning of the year, what's gone on with the CBI, and then eventually the exit of, Governor Urjit Patel at the RBI. Were you disheartened by what you saw happen to the RBI last year?
I think being where I am, I should not be commenting on any of these things. I will probably comment on the need to get interest rates in harmony, because we are talking of the economy. I think we need to get interest rates to a level where economic activity becomes really burgeoning. And the other point that I want to make is good steps in terms of the debt resolution structures that have been put in place. But we need something else to happen.
Mr. Kamath, you've been an institution building man. Were you not disheartened by what you saw happen at RBI last year?
Let me put it this way. I would probably bypass that question, honestly, and talk more in terms of the need to get interest rates aligned. Because what I'm truly worried about is, if an NPA, God forbid, happens in India, in 6 years it doubles, and then you carry the burden in your life. Just want to contrast with what happens in China, because interest rates are half that of India. An NPA can be nurtured over 12 years and put back to productive use. And in 12 years, you have not only an interest rate cycle, but you also have an economic cycle which works for common good. So I think going forward, we need to look at our interest rate structure very carefully if we aspire for the 10% growth that we're talking about.
All right, fair. Last question. Again, I think you might choose not to answer this, but I'll ask you nonetheless. The events that took place at ICICI Bank over the course of the last year have raised several questions. The cloud over the CEO and Managing Director, Chanda Kochar. In fact, today, even as we speak, there are raids being carried out, at one of the borrowers. That was part of the story that, went on all through the last year. The issues with the board not being able to grapple with this sufficiently. When you saw what went on at ICICI Bank, did you feel that the institution had lacked the ability to deal with this? Again,
it's not proper for me to comment. You had
Mr. Kamath, you built that bank.
Yeah, I know that. I think it's not proper for me to comment at this stage. It's for the board and the bank to respond.
But do you believe that the...
Thank you.
Okay, all right. We'll leave it there. Thank you so much for your time. Thanks.
Bye.
All right, special conversation there from Davos, bringing it back to domestic shores and what's been happening here. So we're still flat, nothing much is happening on the index at right now at 10,840, but in the green, so that's good news. And as you can see, it's been quite a volatile day, a lot of gyrations there, a lot of dips and a lot of peaks, as you can see. But right now, let's see what happens as we move into the last half an hour of trade. Hadrian Mendonca of IIFL, he's joining us on the show right now. Hadrian, I wouldn't say it's been, a big bumper day in terms of the pricing activity, but the volatility sure has kept people on its toes.
Yeah, the volatility has been extremely high in today's session. In fact, markets showed a very promising sign of a crackdown in yesterday's trade after we saw a bearish head and shoulder pattern breakdown on the smaller time frame charts on the Nifty as well as the Bank Nifty. Unfortunately, we have not seen the level of follow-up selling that we were expecting. In fact, it has just kept a lot of traders on the edge, keeping them guessing whether we're going to fall or we're going to bounce back. Currently, what's going on is a clear case of index management, where we are seeing 4 to 5 index heavyweights just managing to hold on to the index levels, especially Reliance Industries, ITC, SDFC Twins. If you can add an ICICI Bank around, I think Reliance Industries has been, solely responsible for this great up move that we've seen in the past few days. I think leaving Reliance Industries, if you get into the mid caps and small cap space, I think there is a lot of selling happening, in the broader space. So I think as far as the Nifty strategy is concerned, I'll really want to see the Nifty surpassing the 10,880 breakdown levels, before which I could actually go ahead with long positions in Nifty. Till then, I would be a little cautious.
What would your call on stocks be then? And what kind of stocks are we looking at from trading point of view?
Yeah, as I mentioned, Reliance Industries, that will be my first long bet. We have seen a beautiful flag pattern breakout on the smaller time frame chart as well as the daily charts. I think Reliance is on its way to move much higher from here on. In fact, the projection of the poll is indicating another 120-point up move on Reliance Industries. So I think one should not miss out on the flag pattern breakout, and one can accumulate Reliance at these levels. We are expecting a short-term target of 1275, keeping a strict stop loss at 1220 on the downside. Second long call would be on a Tech Mahindra. We've seen a very good momentum play on this stock, and I think the momentum is getting extended. So we are expecting a short-term target of 745 and keeping a stop loss at 719 levels. As far as one short position that we are pretty bearish on our stock is Ambuja Cement. We've seen a very strong bearish candlestick, being built in today's session after being in a declining mode for the past 1.5 weeks. So Ambuja Cement is still showing signs that it can extend the momentum on the downside. So one can short sell Ambuja Cement January futures for a target of 201, keeping a stop loss at 214 on the upside.
Okay. Stay on Hadrian. Let's bring in a key market voice. Gautam Sinharoy of Motilal Oswal AMC is joining us on the show. Gautam, good having you as always. Thanks so much for taking the time out. This is Neeraj here. Good afternoon.
Thanks, Neeraj. Good afternoon.
Gautam, let's assume that the money starts coming in truckloads in the next 2 or 3 months. Would you be comfortable deploying that in a scenario which is as volatile as it is looking on a daily basis right now?
Yes, Neeraj, the answer to that is fairly simple. It's not an environment where you'll be comfortable deploying truckloads of money, but yeah, you'll be comfortable deploying some money, because when the truckloads of money start coming is when the market also starts reacting, right? And then you end up chasing stock prices, which has pretty much been the phenomena last year, the year before that. So, too much of liquidity, abundance of liquidity is also a problem when you're deploying capital. So that is something that one has to bear in mind. Thankfully, off late from the money deployment perspective, things have been easier because flows have been light. Whether that continues to be the case remains to be seen. But yeah, it's a much happier situation to be in if you have moderate but decent inflows, but not truckloads of money coming in.
That's candor from somebody on the fund management side, and always appreciated. Fair call. Gautam, so let's ask about how are you viewing the current valuations? Because it's a handful of 3 or 4 or 5 names which are delivering the earnings growth as well as holding the markets up. If 2018 seemed to be narrow, the start of 2019 has been even narrower. What's your feeling? Do you reckon that post this earnings season and post the budget going back, there is a chance of the markets pulling back a bit, because earnings really haven't set the stage on fire thus far?
Correct. You're absolutely right there, Neeraj, that earnings are not really, something that you should get hyper excited about the way things are panning out. The delta in earnings is coming largely from these corporate banks coming back into profitability. That is well known in the markets. So it's not a broad-based economic recovery that we are seeing. That is something that you have to bear in mind. Having said that, I think there's also a big positive change from the starting of the previous year, which was 2018, to Jan 2019. So Jan 2018, we are getting into a very expensive market where almost all good quality investable names were at record high PEs, and it was actually difficult to find investable ideas at a reasonable valuation level. And the problem was across the market cap spectrum. So if you moved into mid caps, they were even more expensive. Small caps were also very expensive. Now, through the course of 2018, I think two things have changed. One is, of course, that many of these very expensive names, sectorally or market cap wise, have corrected meaningfully. So even now, they continue to be expensive, but they're not crazily expensive. The second thing which has happened is that the dispersion in valuation that was there, so there were names which were high quality names and were very expensive, and there were some sectors, pockets of the market which were quite beaten down. That dispersion has also changed meaningfully. So it's not like, there are sectors which are crazily overvalued and sectors which are very cheap. So it's a more evenly balanced kind of a valuation scenario today. So what that means for investors is that, as long as you get the growth stories right, as long as you get the stocks with good compounding of their EPS right, you would be able to buy them at the right valuation, right? And as a stock picker, that is all what you look for. Well, it is not a very inexpensive market where, things are there for a bargain and you'll make tons of money. That's not the case. But at least it's a market where you can go in and with reasonable confidence about future returns, buy stocks. So that gives you a lot more comfort compared to the beginning of last year.
Do you think, and good afternoon, Gautam, this is Devina here. Do you think this time around the consensus view on financials is that it is going to pay off well this year? Do you feel the same, or is there a contrarian view that you have?
Yes, I would like to be contrarian there, but I am actually with that view completely. I can't see any reasons to get contrarian. Financials is one area, especially retail financials, where growth has been very strong, continues to be strong. Companies are, there are very high quality companies available. That is something everybody knows. Now, again, valuations are also not something which are crazily expensive here. Coupled with that, if you look at the so-called high NPA banks, the so-called corporate banks, if you may, there the NPA cycle is bottoming out clearly and there will be an earnings rebound. So that is also looking a lot more exciting today than it was some time back. So overall financials, especially banks, and especially banks which have strong liability franchises, they are looking very good. Sorry.
Okay, no, Gautam, just request you to just hold on because, Davos is on. And I think we've got the president of ArcelorMittal with us. Menka is in conversation with him, so I need to cut across there. Over to you, Menka.
One of India's most important insolvency cases, the SR Steel case, has been hitting the headlines every single day for the last 2 years almost. The winning bidder in that case is ArcelorMittal, as you know, but unfortunately they haven't been able to take over the asset as yet because of a spate of litigation that continues at the National Company Law Tribunal. And just 2 days ago on Bloomberg Quint, Sajjan Jindal threw another spanner in the works when he made the suggestion that the asset should return to its original owners, the erstwhile promoters, the Ruya family, because they were willing to pay 100% of the dues. Mr. Jindal also then disclosed that he was still interested in the asset. He had been a bidder, but didn't bid as high as ArcelorMittal, and that he was hopeful to partner with the Ruyas to be able to take it over. What does ArcelorMittal make of these developments? I have Aditya Mittal right here with me at the World Economic Forum's annual meeting to talk about that. Aditya, thank you very much for being here.
Having me.
Let me start by asking you what you make of the incredible delay we've seen in this case. You won. You had more than 90% of the lenders vote in favor of your resolution plan. It was just the last step of the NCLT approving your resolution plan, and instead what we've seen for the last 3 months now almost is delay, and more delay.
Yeah, absolutely right. I think it's very unfortunate. I think in your introduction, you talked about 540 days, right? That's too long. The insolvency process was designed to be completed in 270 days.
Right.
So it's a shame because everyone's losing money. I mean, the creditors are losing 17 crores a day. I mean, India is not such a rich country that we can afford our state banks to lose so much of money. I think you talked about litigation. You know, we have acquired lots of companies in the world. First time we have been sued for acquiring a company. So these are unique circumstances. But look, I think the IBC process was designed to value maximize.
Right.
That is the basis of the IBC process, but it has to be within the rules of the IBC. And within that framework, we have won. We had the best bid. We had a very credible resolution plan. We have a very good plan to improve Essar Steel. We start with safety, health and environment. We have a lot that we can bring in terms of our capability and knowledge in that space. We want to complete the uncompleted CapEx.
Right.
There's a pelletizer, there's a coke battery. Essar Steel still hasn't achieved its design capacity.
Right.
So we need to make sure it achieves full output. We want to grow the Hazira facility. We also want to look at Paradeep. We think Paradeep is interesting from a greenfield perspective. So we have very strong plans, ambitious plans, and we hope we can bring our technology to bear. We have a leading partner in this acquisition. We have Nippon Steel, the largest steel company in Japan, one of the largest steel companies in the world. And together I think we can provide India not only with a good safety environment for Essar and its employees, but good environmental practices, as well as bringing products and technology to the marketplace.
Well, that should have been the winning pitch, and it was in some ways.
It still is.
Yeah, it still is.
It still
but
is.
you are now faced with the promoter family, the Ruia family, wanting to pay more than you have put on the table in the IBC process, pay back all the operational creditors, and that has thrown a spanner in the works. How do you react to that?
Well, I think it's very interesting. I don't think it's thrown a spanner in the works. I think that's far-fetched. If you look at the same family or the same reincarnation based on the Supreme Court, Mittal, their first bid, according to media reports, was about 20,000 crores. So if it wasn't for us, the country would have lost 22,000 crores because our bid is 42, right? And that's why I think it's very important that the IBC process is followed. India is a growing country, it's a developing country. If India is not rule-based, then I think the damage to the country is much greater than just the Essar process.
But they're willing to pay back all the operational creditors, many of whom are in favor of the Ruia plan, even if that doesn't matter in the formal process, so to speak. The NCLT in previous cases has said value maximization and being able to pay everybody back is an important element in the way they decide. And so therefore, it's not yet clear whether the NCLT will allow for this unusual set of circumstances to prevail. So what do you make of the fact that you have the winning bid, but you might still not win this asset?
So if India is rule-based, which I hope it is, then there is no chance that we do not win. This whole thing of value maximization and coming in, I mean, this company was there, and you said Essar has been in insolvency for 540 days, right? So why did they not come before? They had occasions to bid. There was a round 1, there was a round 2. Finally, the Supreme Court said, if you want to bid, pay off your other dues. What about all the other dues? We paid it, right? We didn't believe, we didn't agree, but we spent $1 billion, 7,000 crores, took care of Uttam Galva, KSS. And I think that's basically my message. India has to be rule-based. That is why India is respected as a destination for investment. That is the basis where India will grow, because any businessman, whether outside or inside India, you rely on basic process of law, right? And that's what we followed. The Supreme Court agreed with us. We put in the winning bid. The COC has agreed with us. So from my point of view, all these tactics are to delay, to frustrate, to prevent the right resolution for this company.
Okay, 2 quick follow-up questions. Sajjan Jindal was candid enough to say that there were 2 reasons why he was backing the return of this asset to the Ruias. One, that, he was still interested in the asset and he hoped to be able to partner with the Ruias to take it to its next level of growth. And second, when I asked him, I said also, is it the fear of having the world's largest steel company enter India in a much more serious way than it has in the past? And he said, yes, of course, that's also true. Who wants to have to sit next to ArcelorMittal on the table? You've got to give him credit for the candor, but what do you make of this twist in the tale?
Of
Mr. Jindal's interest in participating with the Ruias and taking this asset further, and the sense of Indian companies not necessarily wanting you to join the game in India.
Yeah, I'm not sure that's what he said. I think, look, at the end of the day, every time you acquire a company, there are other interested parties. It's not the first time we've seen that. We saw that in Europe, we've seen that in North America, we've seen that in Brazil. It's not like we win every acquisition. We've lost some as well along the way to erstwhile competitors. We think that there is room for competition in the country. We have a lot to bring. I think I went through our capabilities in terms of safety, health, environment, product, technology. And I think, look, Jindal Steel has always been interested in SR, perhaps not at the EOI stage, but by the time the second round was coming for the bid, I think that's probably, we're talking about April, May last year, and they'd already thrown their hat in the ring. So from my standpoint, it's not a new development. I think my message really is the process is over. It's complete.
You don't think that this participation strengthens the RUI offer?
No, I think that was already there, right? Okay. I think New Mittal has been disqualified. They have not paid the dues to the related parties. We have the winning bid.
Okay.
We have to follow a rule-based process.
Okay, get that. A couple of banks, for instance, State Bank of India, the largest lender to SR Steel, has put all of its loans on sale. These might be purely commercial reasons for why banks are doing this, but do you think that sort of in any way jeopardizes or makes more vulnerable this process of your takeover?
I think, look, it emphasizes why we need the right resolution, why IBC has to be rule-based. The same banks have a bid from ArcelorMittal, investment-grade company, and Nippon Steel, investment-grade company, and they're selling their debt at an 18% discount, right, to our bid. That's a lot of wasted money. And this money can be effectively utilized to re-lend in the sector, pump in liquidity in the Indian economy, and re-energize the marketplace. SR Steel is also stuck. SR Steel cannot pursue its development. They cannot do capex. They cannot provide a strategic direction to its employees. So I think all of these developments are just demonstrating that we need to close this process, move forward, follow a rule-based environment.
You're not fearful that the people who acquire these loans might in fact play some role in changing the course of this process?
Look, and we are the highest value bid. Yeah.
You have a
All right, that was the conversation that Menka was having with Aditya Mittal, the president at ArcelorMittal. There's a slight bit of a visual issue there, but we'll try and patch that back. In the meantime, we're going to be taking a very short break right here on Countdown. On the other side, we will get you some strategies, the Fab 4 stocks of the day, and what dealing rooms are talking about.
One way to do that is to collect and celebrate the life lessons of those people.
Deepak Ramola, the man behind Project Fuel.
FUEL stands for Forward the Understanding of Every Life Lesson.
His audacious mission is to immortalize the wisdom of as many people as possible.
One thing I was absolutely sure about, I don't want it to be a quote on the wall. I want people to experience. So the experiential part is where we use different tools and mechanisms to create one act, and the act is of making lives count.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
All right, welcome back. You're watching Countdown. We're going to be watching out closely for some numbers that should be out shortly on your screens. Yes Bank is reporting its numbers, and I believe we should be able to get something more on the name of the new successor who will take office post-Rana Kapoor. Ravneet Gill, yes, of Deutsche Bank. So he was anyways one of the contenders, and that was a report that we had been putting in. He was the CEO of Deutsche Bank's India operation, and he had joined the race to succeed Rana Kapoor as the next chief executive, and that's the name that has come out. The stock is up now, but I think the numbers also should be out on your screen. But the bigger news is that they have a new head at the helm. They have a new CEO, Ravneet Gill is the name that's come out, 202 on the stock, and it's rising pretty quickly. The numbers in terms of the net profit numbers, we're getting closer to about 1,000 odd crores. 1,086 is what we'd anyways factored in, but some more comments coming in there. Let's bring in our guests on the show. We've got with us Forum Parekh of India Bulls Ventures, who's joining in right now. Forum, good afternoon to you. First off, your reaction to the name that has been announced, Ravneet Gill.
Yeah, good afternoon. The prima facie numbers that we are seeing, obviously it has come below expectations. But then the announcement of, MD and CEO, I think it is a very good news. That is taken as a very positive. As we were aware that numbers are going to come below expectations, and profit, we were expecting 1,100 crores on the bottom line. So it has come little, lesser than our expectations. But the fact that we have a successor, in place now. So that ambiguity is gone, and I think that is being taken very positively by the street. So we were all looking for a good successor, and I think that's what is announced now.
Okay, well, Ira Duggal, our banking and economy editor, also with us because Ravneet Gill has been named as the new CEO as well. Ira, your thoughts?
So, obviously a big moment. Bank founded by Rana Kapoor. Finally, we'll have somebody else heading it. We won't go into the background of Rana Kapoor because obviously we know all of that. Brief mention on what Ravneet Gill represents. Certainly represents a fresh start in the sense that had you seen Rajat Monga getting named as the new CEO, there would have been a lot of overhang saying that Rajat Monga was there through this entire period when the bad loan problem built up, when the divergences were reported. So, that overhang sort of goes away with Ravneet Gill. Who is Ravneet Gill? Well, he's been in the foreign banking side. He did a lot in terms of trying to push Deutsche on the retail side. I don't know that he had much success because, Deutsche had its own problems globally. So, the few times that I've had a conversation with him, he's been very focused and very interested in the retail space. So he gets that India banking is about retail banking more than everything else. So, he certainly comes with that perspective. He doesn't come with direct experience of retail banking, but he does come with corporate banking experience. So for Yes Bank, which is trying to go up from the mid-corporate segment eventually to large corporate, certainly Ravneet will be able to do that very well. And no doubt he'll be able to build on the strength that Yes Bank has already built, which is on the retail banking side. So, I think he's a good choice. He comes with a clean slate. I think just to mention, he's been approved by the board and the Reserve Bank of India. Remember, there also has to be a shareholder agreement on Ravneet Gill, in the sense that the two Indian partners, as they're called, which is the Madhu Kapoor family and the Rana Kapoor family, also have to agree on Ravneet Gill. They both have to sign off on it. We don't know whether that agreement has already taken place or whether it happens after this. My understanding was that once the bank gets an approval from the RBI, it would then send that name on for approval from the Madhu Kapoor side, because the rights of nomination are joint rights, as we've been saying over a period of time. So that may be a last thing that has to be cleared. But since this is an outsider coming in, again, it isn't somebody who's been known to be close to Rana Kapoor, maybe that overhang will also go away. I can see that the stock is reacting. I haven't seen the numbers very closely, but certainly this removes one big issue for the bank.
But, the street obviously was also factoring in, if somebody who's not associated with Rana Kapoor comes in, there'll be a big kitchen sinking process that will happen of the balance sheet, and which could negatively affect.
I don't know if that is the correct expectation right now, because there has been such a deep AQR on banks. The RBI has spent 2 years, more than that actually, going through the fine print of bank balance sheets. So whatever was not deeply hidden, by deeply hidden I mean that whatever was in the books the RBI has already found. That is why Yes Bank has seen both their bad loan numbers go up and the divergences that they reported for 2 years. I'm curious to see whether there's a divergence that has come through for this year as well. This is for last year, which would, the audit would have been completed during the quarter, so they would have given us some information on that this quarter. But, I think this kitchen sinking story has changed a little bit, even for public sector banks and for banks like this, unless, of course, there was stuff happening which is way beyond the balance sheet. Now, that nobody knows of. Yeah, and that nobody knows of. I have just one last word. I don't know if the release says anything about whether Rana Kapoor will stay on the board or not.
Okay, while we just try and do that, since we also looking at the numbers, we'll just get in for what thought from Forum. Forum, the NII at 2667 crores, net profits at about 1001. I don't think there's too much of a change out there. You could argue for bits and pieces, but the numbers by and large seem to be okay. I think the bigger announcement probably is what's happened in terms of the change of the CEO. What's the call that you have on Yes Bank after the numbers that you've seen and after this new CEO that has been announced?
Yeah, so NII has been very much in line with our expectations. And as I said, bottom line is a tad bit lower. But then the fact that we have a new successor, Ravneet Gill, he has a good name in the industry. And we feel that now the stock is poised to move upside from here on because all the negative news is discounted. I mean, all these while, the street was expecting negative news in terms of increase in asset qualities, which is very much reflected in the Q3 results. As a result, we feel that the stock is bottomed out and it can give a good upside of 10-15% from here on.
All right. What's the way forward now in terms of, obviously, we had seen the stock correct, valuations come back down from an entry point into Yes Bank?
Yes, we definitely feel one should definitely enter because, NII growth is good. And let's see now in the management commentary. I mean, we have a con call. So how do, the management pans out the future, details and everything. So, but as of now, in terms of valuations, we are very comfortable with the price to book value, what it quotes, being a larger bank. So we do have a buy call on the stock.
All right. Provisions other than tax expense and contingencies is, I think, about 550 odd crores from last quarter. That has come off, I believe, for Yes Bank.
The stock is up 9.5%, and I can safely assume, I'm sure both of us agree on that, it's got not as much to do with the results, but the fact that there is Ravneet Gill now. Yeah. Forum, what would you now believe happens to the P multiples of a bank like Yes Bank? If indeed, as I use your term, the overhang of who the new CEO could be is gone out of the window, aside of just the pure play quarterly performance, does anything happen to the price to book multiples as well, to your mind or in the minds of, you believe, institutional investors?
I do not see kind of re-rating happening in this stock. We do not expect the premium valuations being quoted to Yes Bank on this kind of result. The stock is only purely rallying because of the
new CEO. Precisely. Yeah, so that's my question to you. I mean, do you think that Ravneet Gill coming in changes the equation? Because as you said, the results are not the reason why the stock would go up 10.5%, right? It's gone up a bit.
Correct.
Would you believe that there could be a price to book change of sorts because of the nature of the new CEO alone?
So, because we just have to see how it works out. I mean, we cannot coach from right now. We just need to give him a couple of quarters to see how does he execute. But then, to what multiples it was trading earlier to what it has fallen, we feel that, currently it is justified. The risk-reward ratio is very much favorable. And that is why current market price, it augurs a safe bet, in the banking stock.
Safe bet, so, 217 in the banking space. Yes Bank. That's Forum's call, right, Forum?
Yes.
Okay. Ajay Bagga, market expert. Forum, would love you to stay on, but if you are busy, we'll let you go on that note. But would love you to stay on and maybe answer a couple of questions in a bit, because we are also joined by other experts. Ajay Bagga with us on the phone line as well. Ajay, good having you. Thanks much for joining in. Not the results, but the fact that for the first time since any of us would remember, Yes Bank would be headed by a man other than Rana Kapoor, and that man is Ravneet Gill. Your initial thoughts on this?
No, it's good. We have seen that with the leadership change, when good leaders have come in both in Axis and ICICI, that was welcomed by the market. So this is somebody with a very strong track record. I've worked with Ravneet at Deutsche earlier, and he brings a lot of credibility, a lot of very deep expertise to the job. And, given a free hand, I'm sure he'll make a lot of difference to the bank.
All right. Ajay, now that we have this out of the way, Yes Bank is now the focus going to remain on what happens operationally? Because, like Ira earlier on highlighted, unless and until there's something really hidden with regards to the operational performance, there's no really big kitchen sinking exercise that one should expect.
Yeah, we'll have to see if there is any AQR, skeletons that are still left over, if there is any provisioning that is still left over. And, this time's results clearly had the ILFS exposure also crystallized. And the problem with ILFS today is that SPVs which are cash flow positive are also reneging on their payments. So that will remain an overhang for the whole sector per se, and even for Yes Bank with about 2,000 crores plus of ILFS exposure. So that will be an issue.
Ajay, some updates there, by the way. They have classified one large account worth 1,913 crores as NPA in the December quarter. I would reckon that this would be ILFS, right? So they've already provided for it now.
Yeah, quite possible. Yeah.
So then, therefore, the question, Ajay, that if indeed kitchen sinking is no longer an issue and they have a guy like Ravneet Gill, I'm just quoting Devina's question back to you, would you reckon that the demons are out of the way? And therefore, to your mind, not specifically for a Yes Bank, but would there be a reset of the valuation derating that had happened for Yes Bank earlier?
Well, going back to the earlier valuations will take some time because overall we are in a very changed scenario going into May. So getting those types of price to book value will be difficult. But definitely from the very low levels that we have seen, we are seeing the stock immediately reacting 10% plus on this news. So obviously market is liking the certainty of new leadership coming in. And second, the big thing will be that there were a lot of shorts built in, and those are getting squeezed out. So let those work out, Neeraj, then we'll see. But overall, leadership-wise, with Mr. Brahmdutt as the non-executive chairman, and now Mr. Gill taking over as the CEO MD, I think that's very good news. And we have seen that with Axis, the reaction that happened in Axis when Amitabh Chaudhary was announced, and similarly when Mr. Bakshi came in ICICI Bank. So we've had two very recent examples where there was a re-rating or at least the shorts got squeezed out a bit.
And coming to the next question as to what Ravneet Gill will bring to the table in terms of expanding Yes Bank's foray and forefront into the corporate side, and how that will in turn work its way for the bank.
No, definitely, Mr. Gill has very deep relationships across corporate banks in India. He brings also a lot of exposure to international banking. So both taking Indian corporates international, as well as banking international companies coming into India. Both ways he has very deep experience. He's a corporate banker. And that will help Yes Bank, get into the MNC segment, for example. Overall, we have seen, in the past when foreign bankers have moved into private banks, mostly it has been very good experience. You look at Mr. Sopti, who came from Grindlace and ABN AMRO, Mr. Rana Kapoor himself having a foreign bank background, and the entire HDFC senior management, which was largely ex-Citibank, and the kind of value they created, or where the at IDFC, again being ex-Citi and ex-ICICI. So we've had these examples in the past, and the foreign bankers bring a lot of compliance orientation, very deep relationships, strong process orientation. I think that helps in the banking segment every time.
I think it certainly does. The press conference should be about to start. Okay, and we'll cut across when the actual press conference. This is, of course, the corporate communications team speaking, but we'll cut across when the actual team starts speaking as well. Ajay Bagga, just stay on. Let's have one final question with you, I'm sure. But before that, Forum, what's the pecking order in the private sector banking space for you right now after this announcement is done? The corporate-facing banks, may?
Yeah, so in corporate-facing banks, the pecking order would be first HDFC Bank, Kotak Bank, and then Yes Bank. Of course, we have seen the kind of growth rate, 20% growth rate is what HDFC Bank is sustaining over a couple of quarters. So we feel that HDFC Bank will top the list, followed by good performance by Kotak Mahindra Bank. And now the fact that we have good management at the helm for Yes Bank, hence we would also want to add Yes Bank in the pecking list.
All right, we'll leave it at that. Thanks very much, Forum. Appreciate you taking out the time. That's visuals there, Mr. Rajat Monga, as we can see there. They're going to start talking really soon, and when they do, we'll cut across there. But Ajay Bagga, he's still here with us. Ajay, just want your opinion. Prior to this whole issue, and Mr. Rana Kapoor not being allowed to come back at the helm as CEO. The earnings performance of Yes Bank on a quarter-on-quarter basis was a very encouraging one, and there were no questions asked with the kind of earnings growth that they had, the kind of return on equity that they gave. But that all came into question mark once this issue happened. Do we put that on the back burner and look at the way forward in terms of Yes Bank coming back to those days where the earnings took center stage and they're back on the growth track?
Yeah, definitely. I'm saying again that if the AQR, latest AQR divergence is not there, that will be very welcome for the market. So that number will be looked at because there were, 2 or 3 banks which had very high AQR divergence. And, that certainty is what the market likes. Second is having seen Mr. Rana Kapoor running the bank since inception, that uncertainty had come in that what will be the quality of the management that comes in. And that has got sorted out today. And third, the market was very short on Yes Bank right from the time RBI refused to renew Mr. Kapoor's appointment. And those shorts are today getting squeezed out, and we are seeing this reaction. We'll have to wait. Let's see the management commentary. I'll say give it a quarter more, and then we'll see. For India, we have the big macro issue of politics. So, how much more the stock will run, I have my doubts. Today is a reaction because the shorts are getting out at any cost in cutting the positions. But what valuations will Indian banking go back to, that we'll know by June, not right now.
And I repeat, this is not a recommendation of any sorts from Ajay Bagga. He doesn't talk on stocks. This is more his view on what does this do. Okay, I think Rajat Monga started speaking. We'll cut across. Ajay, we'll thank you. And let's cut across to Rajat Monga.
Operating performance of the bank for the third quarter. I'll start with the key highlights. We are happy to report the resiliency of our earnings, represented by 41% year-on-year growth in our net interest income, totaling to 2,666 crores, which represents a robust sequential growth of 10.3% and is also contributing to a stable net interest margin performance at 3.3%. As a result, we are reporting a net profit after tax of 1,001.8 crore rupees, which is an increase of almost 4% sequentially, despite the bank having to take some accelerated provisions to the extent of a total of 550 crores, especially on account of one stressed infrastructure conglomerate, which contributed to about 571 crores of provisionings in this current quarter. The bank is also reporting an improvement in its capital position as well as the mix of advances from its retail business. So the CET1 capital ratio of the bank improved to 9.1% from 9% during the previous quarter. This is essentially on account of the rebalanced strategy of growth that the bank is adopting, given the very good growth that the bank has experienced in the last 18 months particularly. Overall, the capital adequacy ratio of the bank stood at 17.4%, and within which the Tier 1 capital adequacy ratio stood at 12%. The loan book, advances book of the bank grew at a rate of 42.2% on a year-on-year basis, and it now totals to little less than 2,44,000 crore rupees. This is a 1.8% sequential growth as compared to the last quarter. The composition of advances also moved in favor of retail banking, and it now adds up to 15% of the bank's total loan mix as compared to 11.8% at the same time last year. The bank is also reporting stable funding and an improving liquidity profile constituted by deposits that grew 29.7% on a year-on-year basis and now total to a little less than 2,23,000 crores. Within deposits, the bank experienced a 37.2% growth in its retail deposits on a year-on-year basis and 3.7% on a quarter-on-quarter basis. Within corporate deposits, the bank experienced a 39.9% growth on a year-on-year basis and a 7.9% growth on a sequential basis. The CASA ratio was flat nearly at 33.3%, and the mix of CASA and retail deposits put together improved slightly to 57.5% as opposed to 57.2% in the previous quarter. The daily average liquidity coverage ratio for the bank improved to 102.3% from 99.4% as compared to the previous quarter. And as at close of the quarter on December 31st, the liquidity coverage ratio of the bank stood at 114.3%. The core asset quality trends of the bank also continue to be improving, other than for the infrastructure conglomerate that has been downgraded in this current quarter. As a consequence of which, the bank is reporting a gross NPA position of 2.1%, a net NPA position of 1.18%, entailing a provisioning coverage ratio of 44.2%. If we set aside the infrastructure conglomerate for a moment, the gross NPA position of the bank would have improved from the previous quarter and would have stood at 1.32% as compared to 1.6% in the previous quarter. Similarly, the net NPA position would have improved to 59 basis points from 84 basis points in the previous quarter. And the provisioning coverage ratio would have improved to 55.6% from 47.8% in the previous quarter as well. The bank has contained the credit cost for the current quarter as a result at 29 basis points. And for the 9 months for this financial year, the credit cost now adds up to 64 basis points. This is despite the 24 basis point contribution of credit cost that has come from the infrastructure conglomerate that I have been highlighting. In the quarter, the bank has made no sales to ARCs. In fact, the bank has received an aggregate redemption of close to 115 crores from its security receipts book. I will move on to some more highlights of the profit and loss account for this current quarter. The bank did experience a decline in non-interest income on account of the treasury line resulting from some mark-to-market valuations, as well as realization of some losses on from its investment book. As a result of which, the non-interest income has declined to declined by 37% on a year-on-year basis. As I mentioned earlier, the bank is reporting a provision of 550 crores for this current quarter. I would like to give the breakdown of the provision. NPA provisions are accounting for 507.5 crores, out of which 478.3 crores are accounted for by the stressed infrastructure conglomerate that I've been highlighting. The bank has also taken 99.2 crores of standard asset provision, substantially on account of one part of the infrastructure conglomerate which remains standard. However, the bank has chosen to take a 15% preemptive provisioning on the part that still remains standard. There has been a 184.6 crore incremental provision on account of the existing security receipts book. There has also been write-back of provisions on account of investments to the extent of 205.8 crores and on account of other items to the extent of 35 crores. The return ratios of the bank stand as follows. The return on assets for the current quarter on an annualized basis is 1.1%, and the return on equity again on an annualized basis is 14.4%. The book value of the share of the bank stands at 122.8 rupees per share as on December 31st, 2008. Some more statistics on the balance sheet side. The total asset base of the bank has grown by 40.9% in this last 1 year, and it grew by 0.6% on the sequential comparison. The total asset base of the bank now stands at little less than 3,74,000 crores. I mentioned that the CASA ratio is steady at 33.3%, and within which current accounts have grown by 30.7% on a year-on-year basis, and the savings accounts have grown by 4.4% on a year-on-year basis. Loan book has grown by 42.2% on the year-on-year basis and 1.8% on a sequential quarter comparison basis. Within the loan book, the retail advances have grown by 82.9% on a year-on-year basis. In this quarter gone by, the retail contribution to growth was as much as 65% of incremental business that the bank has booked in the third quarter. One more statistic on the balance sheet side is regarding the risk-weighted assets of the bank. They now stand at 3,06,289 crores, which is a 82% share of the total assets. So when we compare our risk-weighted assets to total assets, the 82% mix has improved from last year same time when it was 84.3%. The asset quality position of the bank has some core improving trends. While I've highlighted the fact that the bank has had to take a downgrade on account of a large infrastructure conglomerate, the gross NPA position of the bank now stands at 5,159 crores, of which 1,913 crores were added in this current quarter predominantly on account of the infrastructure conglomerate, and another 325 crores on account of the core slippages from the bank's asset book. Similarly, the net NPAs now stand at 2,876 crores, which are again contributed mostly by the infrastructure conglomerate, and that value would be about 1,435 crores. When we look at our total stressed assets book, which will include not just net NPAs, but restructured assets as well as some constituency from the security receipts, the total position of the stressed assets of the bank is at 1.98%. If I exclude the infrastructure conglomerate, that ratio would stand at 1.39%. This would be an improvement from the last year position where it was at 2.41%. Within the infrastructure conglomerate, we have downgraded the position on account of our exposure to the roads and the energy vertical, which totals to 1,913 crores, on which the bank has provided 25% in this current quarter. About 617 crores of exposure to the group continues to be standard, against which the bank has taken a 15% standard asset provisioning in this current quarter. Having done this, the bank now believes that the aggregate provisioning, which is made on both the operating as well as the subsidiary companies' exposures in this particular group, are quite adequate and within the expected realizations. This outlook on asset quality continues to be stable. We are reiterating that the impact on account of NCLT proceedings on the bank's asset quality continues to be minimal. In the first list of NCLT, the bank's position stands at only 0.1%, and out of the second list, the bank is holding about 26 basis points of its loan book, which are very, very modest in terms of the position on an overall basis. The bank is also reporting a modest position on its SMA2 status of its loan book, where the loan exposures are overdue by more than 60 days. That position is 19 basis points for the total loan book. There are other statistics which we have added in this particular presentation, which include the bank's exposure to HFCs, which now stands at 3.4%, to NBFCs, which stands at 3%. 96% of the HFC exposure of the bank is rated AA or better. Similarly, 91% of the bank's exposure to NBFCs is also rated A or better. If I look at the large exposures of the bank, and among the top 20 exposures, more than 90% of the bank's exposures there also stand to benefit from external rating being A or better. You may also have the question on the RBI's report that the bank is yet to receive, so I will not be able to offer any comments on that. We've also added the bank's position on other sensitive sectors, which include the electricity non-renewable generation, where the bank's position stands at 2.1% of its total loan book. We have seen reductions in iron and steel, telecom, as well as gems and jewelry, which are there in our presentation for you to take note. The overall corporate portfolio of the bank continues to be well rated, and 75% of the portfolio would qualify to be rated as A or better. I will also now move to some highlights on account of the digital banking and initiatives that the bank has been executing. There is a reasonable amount of domination that the bank has exerted on the payments landscape. The bank continues to have the highest market share of the UPI merchant payments at 30% of the industry, and the bank processed 36 crore transactions amounting to 65,000 crores in the quarter gone by. The bank also is the top remitter bank in the IMPS category within the peer group, with 72% year-on-year growth that the bank experienced under the IMPS category. The bank is also one of the leading acquiring banks in the AEPS category, which processed 4.5 crore transactions across almost 3 lakh business correspondents, which have been enabled for this processing. The bank is experiencing that the mobile as a channel continues to grow and well, and is becoming more and more the consumer's preference. So we have seen a 1.75x jump in mobile banking registrations, a 2.3 times jump in transaction value, and a 1.75% jump on transaction volumes as well as compared to last year. Debit cards as a channel also continues to benefit from digitization, where the bank experienced a 46% year-on-year growth in transactions and a 50% year-on-year growth in values transacted on debit cards. The bank also launched a peculiar initiative for allowing customers to book FDs and recurring deposits through its Yes Robot platform. That platform also has witnessed 1 million transactions in the third quarter itself. This was an industry first offering that the bank was happy to introduce for the convenience of its customers. The bank also launched a complete straight-through end-to-end acceptance of NACH debit mandates for corporate customers, which has reduced the turnaround time from 15 days to a matter of seconds or a near real-time basis as far as the registration of NACH mandates is concerned. The bank also launched an industry-first Yes SME digital banking solution for the Indian SME clientele, which won the Silver Award at the IFC Washington's Global SME Finance Program in the category of product innovation. And we are happy to report that we were the only Indian bank to be honored among the 100 plus international institutes that received awards at this function. The bank is also working to help digitize the G2C payments, the government to consumer payments, where a cashless solution has been initiated in Puducherry Smart City, which has enabled digital payments for citizens and visiting tourists. It also received the mandate to now implement Bharat QR solution in the Puducherry Smart City. The bank is also adopting 2,000 villages to empower about 1 lakh lives there under the Yes Digi Villages program. And this will leverage the SIM-Se-Pay technology as well as the India Stack to introduce instant and paperless banking for the rural customers. Some more commentary on the bank's expansion and knowledge initiatives. The total employee strength of the bank stood at 21,182. This is an increase of 158 employees during the quarter. Total strength of branch network stands at 1,115 branches and 1,714 ATMs and BNAs. The bank is also happy to announce the launch of its asset management business under the aegis of Yes Asset Management India Limited, which very recently successfully concluded the launch of its liquid fund. The bank has also now received approvals from SEBI to also launch an ultra short-term fund under the asset management fold. The bank is also happy to announce signing of an MOU with Kia Motors, which is the world's 8th largest automobile maker. This will enable the bank to enter into a strategic financing partnership and make it one of the first Indian banks to become their preferred financier. Yes Bank also became the first Indian bank to complete a first of its kind digitization transaction with the Welspun Global Brands Limited in the form of e-presentation involving end-to-end electronic presentation of export documents, which makes the whole process of completing the export leg for customers paperless and straight through. The bank also launched a first of its kind bank-led datathon in the last quarter, which was aimed to augment the Yes Bank's embedded data analytics and machine learning units. And this program saw participation from over 6,000 data scientists, engineers, and developers who participated in this, in the various AI and machine learning challenges that the bank posed to them, and will also be adapting the results of this datathon into its live production use cases. Bank has also become the first bank to join what is called the Natural Capital Coalition, which is a global multi-stakeholder collaboration wherein the bank will integrate natural capital thinking into its strategy and operations. The bank was also honored at the 20th edition of the coveted global awards called the Asset AAA Country Awards 2018, where it was awarded the best new bond from India for launching the largest debut international bond issuance, which was priced at the tightest spread over US Treasuries by an Indian bank since 2008. The bank also won the Golden Peacock Award for Sustainability for 2018 and was honored with the runner-up award at the 30th Qualtech Quimpro Awards in the continuous improvement category within the Qualtech Quimpro Awards for the third year in a row this time. Lastly, I would also touch upon some of the board matters that have been discussed in today's board meeting, which relate to appointment of 2 additional independent directors and the recommendation of an additional executive director, which will be detailed subsequently in another press release. The bank has also received approval from RBI for its new managing director and CEO, who would be Mr. Ravneet Singh Gill. And he is being advised to join on or before March 1st, 2019. The details of this also the bank will be communicating shortly and separately. To formalize the above, the bank will also convene on January 29, 2019, a few days from now, among others also to finalize the scope of the interim transition as we look forward to the joining of a new managing director and CEO. So with that, I close my commentary on the performance of the bank for this quarter, and we will be happy to take questions.
Thank you, Rajat. Before we start, once again, few announcements. Please restrict your question to results only. No specific account-related questions, and 1 question per publication, since we have paucity of time. You may raise your hand, and our colleagues will reach out to you. Yeah.
GIL will join on or before the 1st of March. What happens in the interim period between the 31st of January and then? And second, if you could also give us your outlook on recoveries from this large stressed infrastructure conglomerate that you have classified as NPA in this quarter.
Sure, I think as I was mentioning on the first question that you asked about the interim, that position will be clarified by the board on the 29th. So there is another board meeting which is taking place in a few days from now. So that
just as a follow-up then, has the bank reached out to RBI for an extension of the current CEO, or will there be an interim CEO that will be appointed?
So we will be looking at an interim design, like I said, but the board will have to finally take a view on this. It will be, let's say, I would say somewhat inaccurate for me to be speaking on behalf of the board, as this is not a subject which has been fully addressed. And there is a board meeting specifically for this. Yeah, the ILFS is a recovery in progress. So you would have, I mean, you yourself have been reporting a lot on these accounts. So we do believe that there is a substantial progress in the recovery, particularly in their energy and road verticals. So we are expecting the process of sale of these verticals to be meaningfully, let's say, carried out over the next 3 to 6 months itself. And as I was highlighting, the bank has taken adequate provisions. So we are 25% provided for our road and energy vertical and 15% provided for the maritime vertical.
Mr. Monga, Vishwanath here. Just trying to get a sense. You said that you feel that this provisioning that you have is adequate, but your PCR it comes down to about 55.6 to 44.2 when you add this conglomerate. Firstly, in terms of the ability to recover from that account and the current provisioning that you have, do you foresee anything further in terms of recovery, in terms of provisioning against this account? First that.
Yes.
And secondly, there's also been a bit of a slowdown. You said the CASA has been flattish. I mean, you were one of the banks that had the fastest growing CASA for a long period of time. What is happening there and what is your outlook?
Sure. So on the question on this infrastructure conglomerate, our view continues to be that the provisions are adequate. Naturally, there are RBI regulations also which, if sufficient time has elapsed, the provisions are required to be escalated. But we don't believe there would be a wait which will be that long. So we should start seeing results on account of the resolution of this particular account or set of accounts over the next 3 to 6 months itself. There is sufficient and viable interest from market participants in the various businesses of this particular account. On the second part of your question, which was related to CASA, I think there have been industry headwinds that the banking sector has been dealing with, especially relating to increase in the currency in circulation, which hurts CASA almost instantly. As the public withdraws money from banks, the debits go straight to the KA or SA accounts. So there was correspondingly a big surge in CASA during demonetization because it was pushing currency back into banking accounts, which has essentially mostly reversed out over the last 12-18 months. And that's been a clear headwind for growth in CASA. To add to that, there also has been increase in interest rates. So there has been some propensity of CASA depositors to also go more into fixed deposits with the banks itself.
That's surprising because earlier there was an RBI report which suggested the inverse, that people were putting less in fixed deposits and more in CASA because other financial instruments were becoming more interesting for them.
So fixed deposits do have, I would say, a little bit of a liquidity preference by customers, but it also is there are better tax planning alternatives of investments which are available to investors. So I think investors and depositors would prefer keeping liquidity with banks in either savings accounts or current accounts, as well as if they have visibility of liquidity to be held for a longer time in fixed deposits. But interest rates do play a role in terms of how it straddles from savings accounts or current accounts into fixed deposits and vice versa.
Mr. Monga?
Yeah, Ishita.